Hello everyone, I'm Mike Dudley with the Dudley Elite team and welcome back to our Real Estate 101 web series, and today I'm talking about loan comparisons. So we're going to dive straight into it. We're going to be talking about the three different mortgage products out there, which are conventional, FHA and VA loans. We get questions all the time from buyers saying what can we afford, what are the interest rates out there, and what are the different products that you guys can offer us. So obviously you need to speak to a mortgage lender, but to give you a better idea, we're going to dive in and have a look at some of the key factors of different loan options that you guys have out there. So going into the conventional loan, the minimum down payment for a conventional loan is 3%. The FHA is 3.5% and the VA is actually up to 0% down. So really positive there as well. The maximum seller's assist, so what that means is if you are looking for closing costs to be paid by the seller, there is an option here for these two products. So 3% towards closing costs is an option if you're putting below 10% down for a conventional loan. Now if you're paying more than 10%, then you can have up to 6% towards closing costs on a conventional loan, 6% for VA and 6% for FHA as well. Now mortgage insurance, MI. Private mortgage insurance is dependent on credit score, down payment, loan purpose, and the loan term. Now that's for the conventional loan. For mortgage insurance on an FHA loan, there's two forms of insurance. There's the upfront mortgage insurance premium, which is factored at about 1.75% of the base loan amount. And then there's option number 2, which is a monthly mortgage insurance premium, which normally factored about 0.85%. Now for VA, you're looking at a funding fee, a one-time fee that must be paid up front or financed into the factor of the loan. Now, advantages and disadvantages for all of these loans. What are they? Conventional, the mortgage insurance can be cancelled if you put 20% down, you don't have to have mortgage insurance. Really positive factor there. Conventional loans, definitely the best way to go if you can put 20% down. You can also get gifts funds towards these for these loans as well as you can also less money out of pocket as well. So really positives there for conventional. FHA, low credit score requirements. You've also got less stringent income requirements. You can also get that gift as well if you need for your down payment, and you may have a lower mortgage insurance cost as well. So VA, there's no monthly mortgage insurance required, little to no money out of pocket. The seller can pay for some of their closing costs. VA rules are limited and limited charge for closing costs as well. So as you can see, the VA loan's a very strong loan. Now the disadvantages, going into that, you may have higher mortgage insurance costs for your conventional loan, higher credit score is required as well, and more stringent income requirements. But that being said, the conventional loan is still my preferred way to go. It's also the stronger offer if you are offering on a property. MI, mortgage insurance, is required for the life of the loan and cannot be cancelled, and that's for the FHA loan. And finally, the VA, an upfront funding fee that we mentioned before, and the veteran must have income and credit qualified. So as you see, there's positives and negatives with all these different types of loans that you can take out, but we definitely recommend you speaking to not just one, but 2 lenders to get a comparison of these rates and the different positives and negatives for each one. And finally, I'd just like to talk about making an offer, because it's all well and good having these different loan products, but it's good to know also what different factors you come across when you're purchasing a property. So with a conventional loan, like I mentioned previously in this video, it is the stronger loan when making an offer. Basically, especially if you're putting more money down, there's less restrictions on, for example, on home inspections. Some of the guidelines with the FHA and VA will not let you pass. It will have to be inspected by the appraiser as well. So for example, if there's wood rot, then obviously that will need to be cleared up with the FHA and VA. Conventionally, you can actually purchase investment homes with that loan as well, as long as you're putting 20% down. So still definitely the best way for investors, conventional loan. The rest, if you're trying to get your foot on the ladder, if you're a veteran, then obviously VA loan is fantastic. But hopefully all this information has been valuable to you. You're going to be able to use it in the future. That was my goal with all these videos. Please feel free to reach out to me anytime at info@Dudley Elite Realty. We also have our website where you can find all this information in further detail as well. I know it's a little bit overwhelming to listen to all this, but it's all on our webpage on the Realtor 101 series there for you to read. Again, we're going to bring you plenty more videos. Again, reach out to us anytime. I'm Mike Dudley with Dudley Elite Realty, and I'll speak to you soon.